Hello, how are you doing? My name is Noura, accounting and tax professional and the founder of Noura's Books. Today I'm here to talk to you about cryptocurrency reporting. What are you required to... Well, I'm not going to talk about taxable event today. I'm going to talk about that in another video. But I am going to talk about what you need to know. How can you prepare for filing your taxes if you have dealt with cryptocurrency during 2021, or if you are dealing with it in 2022, so you can be prepared and ready for next year tax return. What you need to know is few things. First, your bases. You need to track your bases. How are you tracking your bases? I know it can be really complicated. There are software out there that can help you track your bases, or you have to track it on your own. You have to know how much did you pay for your cryptocurrency, when did you buy it, if you exchange it or did anything. You have to keep track of these bases. When did you pay when did you pay for which one, and the fair market value at that time. You need to keep this record because you're gonna need it. This is gonna determine like how much taxes are you gonna pay if there is a taxable event later. This is one of the things. The other thing, you have to determine your accounting methods. Accounting method can be FIFO, first in, first out, or LIFO, last in, first out, or HIFO, which is highest in, first out. Highest in, first out. So 3 different methods. You cannot determine which one is best for you and for tax purposes unless you just, you have to talk to your accountant and see which one make more sense for you. But once you select that method, you have to stick with that method. You cannot change it every now and then. You have to stick to the method. So this is something you need to keep track of. Now you have to also record any transaction you make. Like you buy something with crypto, you exchange it for another currency, all of these stuff. Well, I'm talking now about taxable events, some of them. So you have to keep track of that. That's part of keeping track of your bases. You need to make sure you're doing this. I know a lot of people thinking they don't have to report anything about crypto, but no, you do have to do that. It is one of the question, and it's standalone question on your 1040. The individual tax return form. They've been asking this, I'm not sure this is 2nd or 3rd year, they're asking this question if you have dealt with crypto at all. So you have to answer, and you're signing that form. That is a legal document, and if you do not answer the correct question, that might be a fraud. So you have to make sure you answer the correct question. And consult with your tax professional to see if the answer is no or yes for you, because if you just have crypto on your profile and just having crypto, you didn't do anything with it, that doesn't mean you have to answer yes. Your answer might still be no. So just consult with your tax professional, let her know that you have crypto, and if you did any transaction, anything using crypto, you might now have to have a taxable event that you have to file. So you have to report, but you have to report accurately. You have to know that crypto considered a property for in term of for tax purposes. So it's not currency. It's not your fiat currency. It's not your dollar. It's considered property. So what applies to money does not apply to virtual currency. It's different. They have the different rules for virtual currency. So make sure that you have all the information you need. You make sure you're tracking your bases. Make sure you have chosen your accounting method. And if you need help with that, feel free to book an appointment and we can talk about this, and I can help you file your tax return accurately. Don't hesitate to contact me. I have a free 15-minute consultation that you can book right here in the link with this video description. You can go ahead and record. And don't think they don't know. A lot of people I've been talking to, they said they don't know what we're doing with crypto. No, believe me, they do. They do. If they're missing any piece of the information, they're gonna keep at it until they get it. And if you don't know already, IRS is partnering with other people, with other companies, like for now, if you created an online ID, if you registered online to see your tax documents there, you'll see like there's like photo you have to take selfie, you have to do a lot of things. That is, they are partnering actually with other companies, so that you might see this later with crypto. You never know. Also, I've seen some states partnering with collection agencies, so you never know. Now government getting smarter every day. If they don't want, if they cannot afford or they cannot do it themselves, they can hire companies to help them, and they already have access to Coinbase. They have access to all these records. So if they don't have access to something now, that doesn't mean they won't have access forever. There's like a lot of money for the federal government and with the crypto trading, so I'm sure they will go and audit as many people as they can if they didn't already started. And I heard also some people saying, oh, they do not, they cannot do that. They only go with people with a lot of money, so we don't care if we have substantiation or anything. But no, believe me, they don't care if you have money or not, because if you don't know, one of the things that they audit the most is the earned income tax credits. If you get the earned income tax credits, you might be in risk actually for audit if they suspect you are not eligible for that credit. And the people who get that, they are not, they're not in high income category. They are actually people in a lower income level. So the most, it depends on your married or a single or a lot of things for your bracket, but it's around 50 and less. So you know, around that, that's not a lot of money, and they audit people like this. Also, another thing is head of household. Mostly would be a single mom with kids. That's most cases that actually, at least I know. So that's also highly audited. So they want to make sure you are really a head of household, because there's a lot of fraud there. So you don't have to make a lot of money for them to audit you. So you want to make sure you have the substantiation, you can substantiate what you record. So make sure you have that, you have everything you need. Make sure you don't lie on your tax form on anything, especially for those who are claiming, who are trading crypto or doing anything with crypto. You don't want IRS to go back to you and say, hey, you committed a fraud. And there is no statute of limitation for that. There is not. They can go 50 years from now and say, okay, you lied 50 years ago with your taxes if you're still alive. So you never know. So make sure you do not lie, and answer the correct question and have exactly what you have made. Don't pay more in taxes that you shouldn't pay. Make sure you just pay what you have to pay, or maybe maybe it's a loss. You never know, but you won't know if it's a loss or if it's a gain, unless you're keeping track of your bases and keeping track of all these transactions. You have to have this documentation, and you have to account for everything. So let me know if you have any question. Hey Shane, and hey Layla. Thank you guys for watching, and let me know if you have any question. Feel free to book a time with me, and I can definitely help you with anything you need. Thank you so much for watching, and let me know if you want me to talk about let me know if you want me to talk about any other topic, and if you need any help, please feel free to book a free consultation and I'll be happy to talk to you about it. Thank you. Have a great day.